Welcome back to your channel, The Big Reset Investment. Today, we delve into a topic that's been generating quite a buzz in the financial world: the true value of gold. Now, when we talk about gold, we're not just referring to the shiny metal that adorns jewelry or the gold coins you might find in a pirate's treasure chest. No, we're talking about gold as a tangible asset, a hedge against inflation, and a safe haven in times of economic uncertainty. One of the leading voices in this discussion is Lynette Zang. She's a seasoned financial analyst who's been in the game for over 4 decades. Zang has made some bold and eye-opening predictions about gold prices that have taken the financial world by storm. According to her, the real price of gold isn't what you see on the ticker tape, but rather, it's something much more substantial. She suggests that the true value of gold should be north of $15,000, and with the way things are going, it could potentially hit north of $50,000 soon. Why such high figures, you ask? Well, Zang believes that the world is shifting. We're seeing wars and currency devolutions that are causing significant disruptions and volatility in global markets. This turmoil, she argues, will inevitably lead to a surge in the value of tangible assets, such as gold. Of course, these are predictions, and like all predictions, they come with a degree of uncertainty. But Zhang's arguments are compelling, and they're certainly worth paying attention to. After all, if she's right, the implications could be enormous, not just for gold enthusiasts, but for everyone. So as we dive deeper into this topic, remember, the goal here isn't to create panic or fear. Instead, it's to arm you with knowledge and insight so you can make informed decisions about your financial future. As Zang suggests, the real value of gold may surprise many of us. Lynette Zang, a renowned economic analyst, has some intriguing thoughts about gold prices. She's not just another voice in the crowd. Zang has a reputation for her astute insights and candid discussions about the world economy. Today, we delve into her perspective on gold prices and their potential trajectory. Zang is of the firm belief that gold should be valued at a minimum north of $15,000. You heard that right? $15,000. This is a far cry from the current market value. But why does she believe this? Zhang's reasoning is rooted in her comprehensive understanding of the global economy and its historical patterns. She argues that gold, as a tangible asset, has an intrinsic value that is not reflected in its current price. She points out that gold has been a reliable store of value for centuries, outlasting countless currencies and economic crises. Its value does not diminish over time, nor is it subject to inflation. In fact, in times of economic uncertainty, gold often becomes even more valuable as investors flock to it as a safe haven. Thus, Zang argues, the real price of gold is much higher than what we see on the market today. But Zang doesn't stop there. She goes on to suggest that gold could possibly hit north of $50,000 soon. This may sound staggering, but Zang bases her prediction on some alarming global trends. She points to escalating geopolitical tensions, economic instability, and the devaluation of currencies as factors that could drive up the price of gold. Zhang's perspective is that these global shifts will lead to a surge in demand for gold, which in turn will drive up its price. As currencies devalue and economic uncertainty grows, investors will seek out assets that can retain their value. Gold, with its proven track record, is a prime candidate for this. Therefore, Zang believes that a significant increase in gold prices is not only possible, but imminent. However, Zhang's views are not universally accepted. There are those who argue that her predictions are overly ambitious, even unrealistic. They point to the market's historical trends and the stability of gold prices over the years. But Zang counters these arguments by pointing out that the global economy is in uncharted territory, faced with unprecedented challenges. In such a volatile environment, she argues, a dramatic shift in gold prices is not only possible, but likely. Zhang's arguments present a compelling case for a significant increase in gold prices. While her views may be controversial, they are certainly worth considering. In the end, whether you agree with Zang or not, her perspective adds a valuable dimension to the ongoing discussion about the future of gold prices. It challenges us to think critically about the true value of gold and the potential impact of global economic trends on its price. Thanks for watching. Please like and write, I subscribed, down below. We will get back to each of your comments individually. Our world is changing rapidly, with wars and currency devolutions becoming increasingly prevalent. It's a time of uncertainty, where the old norms are being challenged and new realities are rapidly taking shape. In such an environment, what could be the impact on the gold market? Lynette Zang, a known figure in the world of finance, offers some thought-provoking insights. Zang is of the view that these global shifts could have a profound effect on gold prices. As we've seen in the past, war times often lead to economic instability. This instability in turn can lead to a flight to safety, with investors turning to assets that are seen as more secure. Gold, with its long history as a store of value, fits this bill perfectly. Currency devaluations, on the other hand, could lead to a loss of faith in paper money. As currencies lose their value, people may start looking for alternatives. In such situations, gold, with its intrinsic value, could once again come into the spotlight. But it's not just about the tangible value of gold. Zang also emphasizes the psychological aspect. In times of uncertainty, people tend to gravitate towards what they know and trust. Gold, with its thousands of years of history, has that trust. It's seen as a safe haven, a shield against the unpredictability of the world. That's why Zang believes that gold prices could potentially soar in the face of these global shifts. With wars and currency devaluations increasing, the demand for gold could rise. And as anyone familiar with the laws of supply and demand knows, when demand increases and supply remains the same, prices tend to go up. So what does this mean for you? It means that in a world where the only constant is change, gold could offer a measure of stability. It could serve as a hedge against the uncertainties of the future, a bastion of safety in a world that's anything but safe. In such a volatile global economy, tangible assets like gold could become even more valuable. Whether you're a seasoned investor or a novice, it's something to think about. After all, in a world that's shifting beneath our feet, it's the solid ground that we crave the most. In this climate of uncertainty, tangible assets like gold take on a new level of importance. Now let's delve into why. Lynette Zang, a renowned economist and gold enthusiast, firmly believes in the power and security that tangible assets like gold provide. Picture this, a world where the value of currency is constantly shifting, economies are unstable, and traditional financial systems are being challenged. In such a world, what's the one thing that remains steady, dependable, and unshaken? Gold. Gold, a tangible asset, has been a symbol of wealth and a form of currency for centuries. Its value does not fade away with time or with the dips and peaks of the stock market. Instead, it remains a solid, tangible form of wealth that you can hold in your hand, store, and use when the need arises. Zang emphasizes the importance of owning gold, especially in our current state of global uncertainty. She argues that gold is not just an investment but a form of insurance against financial turmoil. When paper money loses its value, gold, she says, will stand the test of time. Moreover, gold is globally recognized and can be easily converted into cash in any country. This universality adds to its appeal as a tangible asset. In a world where currency values fluctuate wildly, gold remains a reliable standard. Zang also points out that owning tangible assets like gold gives you control over your wealth. You're not dependent on a bank or a government to guarantee its value. Instead, you hold the power, you have the control. But it's not just about the power or the control. It's about the security. It's about having a safety net in times of financial instability. It's about protecting yourself and your future. As Zang suggests, owning gold could be key to financial security in the coming years. It's a thought worth considering, a strategy worth exploring. After all, in this rapidly changing world, it's the tangible, the solid, the real that may just offer the most reliable form of security. And gold, well, gold is as real as it gets. Gold isn't the only precious metal on Zang's radar. She also sees potential in silver. Now that's something to mull over, isn't it? Silver, often seen as the little sibling to gold, is also showing signs of becoming a significant player in the market, according to Lynette Zang. Zang has often spoken about the potential of silver and how it, just like gold, could be a game changer in the financial world. She believes that the market has overlooked silver for too long, and this could be the time for it to shine. Silver, in her view, is a sleeping giant, waiting to unleash its potential. One of the reasons Zang sees such promise in silver is because of its dual role as both a precious and industrial metal. It's not just about jewelry or coins. Silver is used in a wide range of industrial applications, from electronics to solar panels. This unique position could drive its demand and value, especially as we transition to a more technology-driven and sustainable world. Zang also points out that silver is more affordable than gold, making it more accessible to a larger number of investors. This affordability could lead to a surge in demand, especially during times of economic uncertainty, when people are looking for safe havens to protect their wealth. But it's not just about the potential for financial gains. Zang believes that owning tangible assets like silver could provide a sense of security in a rapidly changing world. Just as gold can act as a hedge against inflation and currency devaluation, silver can also serve a similar purpose, offering a level of protection against economic volatility. In conclusion, Zhang's views suggest that silver could be on the brink of making a significant impact in the market. It's a sleeping giant that could cause a shockwave, reshaping our perceptions of precious metals and their role in our financial future. Just like gold, silver could become a crucial asset in our changing world. So perhaps it's time we start paying more attention to this other precious metal. While the potential rewards are significant, it's important to approach with caution. As with any investment, there are inherent risks and uncertainties to consider. Gold and silver, though precious and finite resources, are not immune to these uncertainties. Even as we discuss the potential for gold to reach heights north of $15,000, and even possibly north of $50,000, it's crucial to remember that these are projections, not guarantees. Lynette Zang, a seasoned financial analyst and gold enthusiast, has always been clear about this. Yes, she sees great potential in the market, but she also warns about its volatility. The shifting world stage, with its wars and currency devolutions, is a double-edged sword. It could indeed drive the value of gold and silver skyward as fiat currencies falter, but it could also lead to unpredictable market fluctuations. These fluctuations could impact the price of gold and silver, causing them to rise and fall sharply and without warning. This is particularly true in a crisis situation where panic can drive market behavior. This can make investing in gold and silver both a potentially lucrative venture and a risky one. Moreover, while holding tangible assets like gold provides a certain sense of security, Zhang also emphasizes the importance of custody. Simply owning gold isn't enough. You must also ensure you have a secure place to store it, safe from theft or loss. This is another factor to consider when deciding whether to invest in precious metals. So before you dive headfirst into the world of gold and silver investments, take a moment to consider these risks. Do your own research, consult with trusted financial advisors, understand the market and its potential for volatility. Remember, the goal isn't just to survive the coming economic reset, but to come out on the other side stronger and more financially secure. As we navigate these uncharted waters, it's essential to heed Zhang's advice. As Zhang warns, we must tread carefully in these uncertain times. As we navigate these unprecedented economic times, Zhang's insights provide valuable guidance. We've traversed a lot of ground today, reflecting on the gold standard, the shifting global landscape, and the importance of tangible assets. Let's take a moment to revisit the key points. Lynette Zang's views on gold prices have been enlightening. She firmly believes that the real price of gold should be north of $15,000, a figure that may surprise some, but, given the current economic climate, is not entirely implausible. The potential for it to hit north of $50,000 soon is a testament to gold's enduring value in times of crisis. We've also discussed the world shifting of wars and currency devolutions. These global events have a profound impact on financial markets. It's in these uncertain times that investment in tangible assets like gold becomes crucial. It's not just a piece of metal, but a shield against financial instability, a lifeboat in the sea of financial turbulence. And let's not forget silver, the other sleeping giant. As Zhang suggests, silver is another hit that will boom and create a shockwave in the market. It shares the same protective qualities as gold and can be a valuable addition to your investment portfolio. A word of caution though, investing in precious metals is not without its risks. It's essential to do your research, understand the market, and consider your financial situation before making an investment. In conclusion, Zhang's insights remind us of the importance of tangible assets in uncertain times. Whether it's gold valued at $15,000 or silver ready to make a shockwave in the market, these metals offer a sense of security that paper money simply cannot provide. Thanks for watching. Please like and write "I subscribe" down below. We will get back to each of your comments individually.